Hey everyone, today's video, I want to talk about the new changes. 8 new changes that are coming in 2023. Well, we're in 2023 now for Canadians. Okay. We're going to talk about tax brackets, changes to the dividend tax credit, one of which is going to save you basically a ton of money, like thousands and thousands of dollars. We're also going to talk about changes to the TFSA, the RRSP. We're going to also talk about the FHSA. Did I get that right? First time home buyers. Oh, no, first time home buyer savings account. Wow, that was a big mouthful. That is coming in 2023. And we're going to talk about the anti-flipping rules and the multi-generational tax credit that's coming for real estate investors or people who want to buy a home. Want to know about this? You definitely want to stick around and watch today's video. Hello, everyone. It's Tracy here. I'm a former engineer, now business owner, and I own a multi-million-dollar investment portfolio that built up over 20 years, made up of stocks and real estate. And my goal on this channel is to talk about building passive income, basically making money while you sleep. Who doesn't love that? So that you can ultimately live your best life. Okay. So if you want to learn more about this in Canada using stocks and real estate, you definitely want to hit the subscribe button and that down notification button to get the latest and greatest videos coming to you every single week. So the first one is the tax brackets. They have changed. So if you are making money while working, the tax brackets, you definitely want to hear about this. The lowest tax bracket is now $53,359, which is at a 15% marginal tax rate. The highest one now is $235,000. 675, and it's at a 33% tax rate. Now, this is so important because of, well, we got high inflation. So Canada, at least the government has done some favors and changed the tax bracket. So if you want to see more about all the different tax bracket changes, look at this table here. Now, the second one I really want to talk about is where I'm really excited is the capital gains tax rate. Because, well, all the tax brackets have changed. That means the capital gains tax rates have also changed according to the tax bracket. So the lowest tax bracket, instead of paying, 15%, 15% taxes as long as you're working. If you have investments, your capital gains tax rate is 7.5% for the first $53,359. Well, for the highest tax bracket, which is $235,675, you can see that it's changed. It's 16.5% in 2023, which is amazing. Now, let's talk about the third change to the Canadian tax bracket. And this is where I'm really, really excited. Okay, we're so excited because you could potentially pay $0 in taxes. And that is the Canadian dividends tax bracket. So you could check in the third column here for 2023. You can potentially pay $0 in taxes if you collect Canadian dividends from Canadian companies up to $53,359. You pay, well, negative 0.03% on eligible dividends. Okay, eligible dividends are Canadian corporations that are in the stock market. As long as they pay you that money, you potentially collect up to $53,000 tax free. Okay. Of course, you can't have any other income because if you have employment income, then you get taxed accordingly. If you got capital gains, you get taxed accordingly. But say you only own at $53,359, you pay $0 in taxes. The other change is that if you had non-eligible dividends, so say, for example, you had a private corporation, you're self-incorporated, or your family has a small corporation, and you get paid dividends because you're a shareholder and it's a private corporation. Well, you're non-eligible, that's considered non-eligible. Dividend tax rate is now 6.87% off of the first $53,359. Now, if you check that table, same table that obviously is up here, you can see at the highest tax bracket, which is $235,000, 675, the highest tax bracket now has changed to, for Canadian dividends, is 24.81%, and then for non-eligible dividends is 27.57%. But I think this is like, we got to celebrate. We got to celebrate because the tax brackets have changed because of inflation. And therefore, we pay, well, less taxes according to these tax brackets, which is like amazing. The next change is the first time home buyers tax credit. That's a huge mouthful. It's actually known as the HBTC, which is a federal government initiative to make home ownership more affordable. So this year, they just passed a new legislation as of December 2022 that first-time home buyers, eligible first-time home buyers, because you have to prove you're a first-time home buyer, can claim $10,000 of non-refundable income tax credit. So this is double what it used to be, which is amazing, which could save you up to $1,500, which is like hooray. So basically, it says there's no need to apply or be approved for the home buyer's tax credit. It just ensures the home buyer's amount of $10,000 in your tax form, which is line 31270 of your income tax return. So you don't need to apply or get approved for the home buyer's tax credit as long as you're a first time home buyer. And then the credit will be applied on the rebate on the taxes you owe, which is amazing. The next one is the first home savings account. So this year, 2023, certain home buyers, as long as you're a first time home buyer or you haven't owned a home for many years, you could potentially save up to $40,000 towards a home with a maximum annual contribution of $8,000 a year over 5 years. And all these contributions are tax deductible and the withdrawals are tax free. So you could dump a money up to $8,000 over 5 years and then use that, withdraw it, and then put it toward your home. Now, the advantage of it, obviously, you can use it as a tax credit while you're dumping money in, which I think is really amazing. So it's awesome. So, by the way, I wanted to confirm the new legislation 2023 allows you to combine the first time home savings account, which is up to $40,000 that you can use, plus the home buyer's plan, AKA your RSP, towards your first home. Now, this is the first time ever. I think this is a very powerful way. Considering that housing prices have gone up, you can both use the first time home savings account and your RSP, AKA your home buyer's plan, to help you buy your first home as your down payment. If you want to learn more about this particular first home savings account or the first HBTC, let me know in the comments below. There's a couple new acronyms for 2023. I would love to do a video for you if you guys are interested. Let me know in the comments below. Okay, but let's go to the next one, which is the RRSP. So this year, we can contribute more because the tax brackets have changed. So technically, you're still capped at 18% of your entire earned income, but because the tax brackets have changed, then you could potentially contribute more, up to $29,210. Now, the next update is the tax-free savings account. So in 2023, you're able to contribute up to $6,500 maximum for that year. And if you haven't contributed anything to your tax-free savings account, or you only contribute a portion of it, you still have up to $80,000 for someone who's never contributed to a TFSA. But of course, you have to be at least 18 years of age since 2009 to do this. Now, if you just turned 18 last year, unfortunately, you can only contribute up to $6,000 last year and then $6,500 this year. So you got to check the rules on how much you contribute per year. But if you've been able to open TFSA since 2009, you can contribute a maximum of $88,000. And everything that grows in it is tax-free. Now, the next update is the multi-generational home renovation tax credit. So as of January 1st of 2023, you can use this new tax credit, which is equal to 15% of eligible expenses. So up to $50,000 you can use of eligible expenses, qualifying renovations that you're using to create a secondary dwelling for your parents, or basically creating an in-law suite, as long as it's for an eligible person, like such as a senior or a person with a disability, you can get up to 15% of the eligible expenses, so up to $50,000 as a tax credit. Now, the last route is the anti-flipping rule, and this is super important, okay? If you buy a home and you decide to change your mind and sell it within the year, this might apply to you. If you are a real estate investor looking to flip homes, this will apply to you. So this is where if you own a home or you bought a home and you hope to flip it within a year, you're going to get taxed on that, okay? It can't be applied like where it's your principal place of residence and you're like, hey, I want to sell this home less than a year. Unfortunately, the principal place of exemption, which is your primary residence exemption, won't apply. And most importantly, any profit that you make flipping a home or deciding to buy a home and sell it within a year because you changed your mind, 100% of the profit is taxed. not 50%, 100%, because you're considered like an active business income. If your active business income, 100% of the income, any profit you make will be added to your income tax bracket. Whatever your marginal tax rate, that's what you're going to be taxed at, not at the capital gains tax rate. So be very, very careful. If you decide to buy your home and you live in it and you decide to change your mind less than a year, don't do it, okay? Please hold on at least 12 months. Otherwise, these anti-flipping rules will apply to you. Now, if you want to learn more about how to collect Canadian dividends up to $53,359 tax-free or combined $100,000 Canadian dividends of eligible dividends, tax-free, how that strategy works, check out these 2 videos out here. Anyways, I hope to see you in the next video. Bye.